Hey, all right. Good morning, everybody. Welcome back to the last trading week of the year. It's going to be a short week again. So Monday and Tuesday will be here, and that's it for the rest of the year. Also, do me a favor, go to my YouTube and help me out. The recordings from the morning briefing are stored on YouTube for people to watch the replay. And I'm going to build out my YouTube next year, adding tips, tricks, probably a bit of a trading academy for options, stock, futures. There's just so many traders that are getting started, need guidance. And I think I'm going to start using my YouTube for that. So you can also find the charts that I use for the morning briefing on the YouTube in the description. And then you'll find a link to the Thinkorswim workbook, which is slowly getting filled out with my trading view charts as well. So you'll get it from YouTube. The call and put wall didn't move. So it's the same as what it was on Friday. Markets are down just a little bit. And if you've been here for a while, you know the way that we generally run these. Gapping down on a Monday is not necessarily a bad thing. I kind of like it. It's a good thing to me. I'd rather gap down on a Monday so that we've got a little bit of a pullback, and that opens the door for us to go higher. Keeps us stable, without getting too stretched, too far, too fast to the upside. And then, of course, we end up getting a pullback somewhere else. So NASDAQ down less than 1%, less than a half of a percent. That's a good place to be. Japan right behind that. Hong Kong, the Dow. Now, small caps down less, but not enough to make it count. Flip into the green, and then we've got Europe up just slightly. You want to look for any change today into the close of Europe, see if it affects our markets at all. You can see we don't have any big things scheduled. We're looking at Market Watch. Market Watch is not a bad place to go if you're just looking for the big stuff, really big events. But that's all it's good for. It does not get the small, nuanced events, and it doesn't look around the world. It only looks at what the US big events are. So it's just a quick glance at the biggest things. Now, FX Street, which is this one here, these guys look around the world and they get into the more nuanced, smaller economic events that often get overlooked at other sites. So this is a good one to go to. You don't need an account to see any of these. It doesn't hurt to have one, but you can see I'm not logged in, don't need it. And they usually have a really good article that talks about what the dollar is doing. If you struggle to understand what's going on with the markets and how the dollar affects things, this isn't a bad place to go. Just keep reading their articles that they pop up in this area. You'll slowly over time get a stronger understanding for how the dollar affects the market. It doesn't cost you anything. They have their own Discord, and their own Discord community is pretty sharp. They've got people that work there that post analysis of what's going on in the FX market and the dollar and how it's moving things. But I think the Discord you can only get into if you have an account with FX Street. So we got some auctions today. And we're going to get some crude data today. Finance juice is a lot like FX Street when it comes to getting some of the more nuanced economic events that are out there. The problem with finance juice is you can't pick the time zone. Like this one, it knows what time zone I'm in, and that's what it sets these clocks to. And it doesn't bother me because I'm used to dealing with market time and I don't pay attention to my time zone. But it's something to be aware of, especially if you're new to trading and maybe you don't live in the US and you're having a hard time keeping track of the different time zone changes. Otherwise, Finance Juice is pretty awesome. They do these morning pre-market write-ups, and then they also do a market wrap for the three major market nations. So you got China, Europe, and us. Right now, they're giving us a market wrap for Europe, even though Europe isn't closing for a couple of hours. They know the US is waking up looking to get ready for the trading day, and they do one early just for us, just for that. At the end of our trading day, they'll do a market wrap for the US. So if our markets moved through the day, make some big change and you can't figure out why, what news made that happen, and you've looked everywhere, you can't find it, come back here at the end of the day and check what they have to say in their market wrap for the US markets. And oftentimes, whatever it was that moved us is going to be in that report. This is one of the few places that does QRA announcements. And that's really cool because for a long time, no economic calendar that I could find had QRA events on there at all. I do have the Pro edition, but you don't need it. I do recommend that you make an account here, though, even a free account. The reason is this is a news aggregate website. It gets news from all over the place. And if you make a free account at the bare minimum, then you can use the filter and you can eliminate news that you don't want. For an example, I don't care about CNN, MSNBC, Fox News. I don't want any of that trash, right? So I turn all of that off and it never shows up in my newsfeed. If you're just using the free account, you can still use that filter, but the next time you show up on this website, it won't remember your changes, and then you have to go in and change it again. Just make a free account if you don't want to get a paid account, and then make the changes and save it, and you don't have to worry about it. Real quick on this site, it does have this tick strike, which is fantastic. Turn that thing on, even on the free one, and when the S&P starts getting flow, it makes this odd little tick noise. The faster the flow, the faster the tick. Of course, free, you get what you pay for, so it's not going to be the most fantastic, but it's a good way to get your attention. If you're multitasking and you're not watching the charts, turn that bad boy on. That'll get it done. And then, of course, they have all of this in audio format, so you can just listen to it. It will drive you a bit crazy if it's, say, if a Fed speaker is talking and every other sentence that he says gets posted in here, this thing will be talking nonstop, so that can get a little annoying. But multitaskers. All right, this really massive ceiling at 7,000, it continues to be the drama, the line in the sand. The SPX closed at 69.08, right under that 69.11 cog line. 6,900 is going to be the structure to lean against, and there's nothing else there, right? That's all the way down here. So right underneath 69, that's it. For any upside, you can see speed bumps, ceilings, whatever you want to call it, all the drama, all the struggle is to the upside. Markets do like the path of least resistance. And right now that is to hang tight and or go lower simply from the path of least resistance. It doesn't owe us a move though, higher or lower. And we are still in holiday flows, so a lack of participation, really low volumes. Remember, with low volumes, markets can make big moves. If you're new to trading and that logic doesn't make sense to you yet, don't worry, it will in time. But markets can make really big moves when there is a lack of participation. Our overnight volume was around 50,000. That's really pretty good considering that's around our average. 55, 57,000 is around the norm, and we're hitting 49. That's really good. We'll see if it gets even remotely close to that tomorrow. But for today, it does show that Europe was participating through the Asia session, and we had some real active participation last night. Now, we got the call wall. I think this needs to be updated. Just a second. I updated it on my other computer, which is on a different account. Those don't look right. Ah, yeah, that's way off. How about now? Much better. All right, so we're hanging out just above the volatility trigger. Call walls overhead, 70.50. Zero gamma underneath the 68.92 cog line. And to get there, we'd have to break the 3-week moving average, then the 10 and the 20. So we've got a lot of structure we would have to work through. The put wall all the way down here, we'd have to get through the 10-week as well. And it's not to say that we can't do that, but that's a lot of structure underneath us to help us out. So the 3-day, the 3-week, the 10-day, 20-day, and then the 10-week. All of that would have to break. Then we'd have to break that pivot back here, 67.75, and then we could get down to that put wall. So we're talking about, get my drawing tool to work, quitter. Talking about the put wall is underneath that level down here. So we would have to go do all of that just to get to that put wall. I'm not saying we can't do that, but it's an unrealistic expectation. We don't have anything that would cause that much drama and chaos at this point. So looking at the daily, anyways, needed to get over there. We did get that nice run up. It wasn't a TRB because a TRB would have happened in, say, 1 bar, maybe 2. One of these 2 would have made it all the way back to the top. That would have been a TRB. Instead, it's more of just a V pattern. It doesn't even really fill out like a cup would or a scoop pattern. So it's more of just a V pattern. Either way, it got us back to the top, and now we're negotiating with this structure up here. This is the perfect time for a pullback. It's what we absolutely want it here, not somewhere else. The pullback, though, at this point, we got some rules that need to be taken care of. So we can eliminate a lot of this stuff. And we're looking for the 786 on this pullback. What we want to see is that when we get profit taking at a known profit taking spot, that it doesn't exceed the 786. So the ones that are taking profit don't exceed the ones that are holding. This is a normal measurement, right? The 786. And we want to see that new people are willing to step in and take their place without this getting lower than 786. So a pullback to this level is fine. And then the next leg up into 111 for the reversal or 1236 for the next pause point. If we get underneath the 786, we start getting around that 10 and we break, then we're going to go back to this half. If we get underneath that, test that 50, we're going back to this low. But the key to it is that 786. Now, we don't even need to pull back all the way to the 786. That's as far back as we would expect it to go if we maintain the profit-taking cycle and swap them out and get new buyers. We would consider it aggressive if it pulls back just a little bit to like the 3, which is where we're at right now. That's the 3-period daily. If we pull back only around that level and then we take off again to the upside, we wouldn't consider that wrong or broken or be upset that it didn't reach the 786. We would just read that as buyers were so aggressive, they didn't get out and take profit like they normally would and see this fade to a 786. They were also aggressive enough to buy in without that pullback to the depth that it was supposed to pull back to. So we just read it as more bullish. There's not a lot of examples where we get a reversal bar here. So we're talking about today wicking down and then coming back up today and just leaving this big tail down here against a high level like this. There is not a lot of examples of that happening. So while I'm not going to say it can't happen, it would be odd for us to rally back today, cross through our own close or our own open and run above that and then close as a green bar higher than this previous high of last week today. That would just be an odd move. But we'll take it if we get it, right? I'm not going to say it can't happen, just that it doesn't happen very often. Now, since this isn't a cup, we're not really looking for a handle. But if we was to get a handle, it would be the depth of around 1/3, and that puts us somewhere between the 10 and the 20 for the pullback target. You could say it's like 69.11 cog line would be the depth of that handle. But this doesn't really fit as a cup and handle, so we shouldn't get a 1/3 pullback. That white line is the 3-period daily moving average. If it breaks, it opens the door for us to go to the 10. All right, these are the ADR lines. on down there and hit that. It's 69.50 basically. And if we get close enough to it, it'll start to act like a magnet. We'll just get drawn there and we'll just go on down and do it. We have this phrase that says if we get to one side early enough, we could go to the other side by the end of the day. Well, the day's half done, so we didn't get there early enough. If you don't understand why the day is half done, well, the market opened last night at 6 p.m. It is past 6 a.m. now. The day is half done. You slept through most of it, sleepyhead. So this is what we got left, right? We're on the downhill slope. It's possible that we still go down and hit the lower edge and make it to the upper edge by the end of the day. It's possible, but the clock's ticking, and the longer we dilly-dally here without getting it done, the less likely it is that we're going to get it done. Also, it doesn't owe us this move down, so while we could hit it and then run up, or at least make the attempt, if that structure holds, then we could very likely just sit with this Globex low and never reach the high of this today, staying just inside that range. That's yesterday's high, our own Globex low, maybe a wick out, and that could be our entire trading day today. Unfortunately, that could be our week, right? Just a really tight, boring, sleepy week. Today's floor pivot is higher than yesterday's pivot. That's bullish. Price opened underneath it. That's bearish. Kind of cancels each other out. We've already hit the floor pivot, so it doesn't owe us anything. And we've broke down below the SNR level. I'll turn that on so you know where that's at. Generally speaking, we look for an S1 to go R2. Well, we broke under S1 and we're more than halfway to S2. So at this point, we pretty much expect to get to S2. If we come back above S1, it's game on to the upside. Aim for the floor pivot. And if we can get through that, aim for R1 and then R2. So if you want to just hang out with an alert set at 69.65, we get above that level, it's game on to the upside, which would be a bit like a TRB anyways, or the failed bear flag, if you can see it. For those who know what I'm talking about, you know, this purple line down here is the weekly pivot point. We're inside the weekly channel. If we get underneath that weekly level, then we'll look for the bottom of the weekly channel, and then we get outside of that, and we'll worry about what's down there after that. But that's basically 69.50 anyways. We get underneath 69.50, we could have some fun. That pretty much wraps it up right there. I mean, that's it. This is game right there. What a really good way to start the week. Awesome. Take it. All right, we can see the distributions from last week. We're already testing this middle distribution. If we lose that, we've got the point of control, 69.32 cog line. You got to love them cog lines, man. They just keep showing up. Underneath that, it starts to get ugly, right? So this distribution is where we're at right now, and so far it's holding. That was a front run on 69.50 after we made it through 69.50, right? See how it played out last week? We made it through that level, and then we pulled back like a Busby into that level. Spent some time digesting there before making the next leg up and then putting in more distribution up here. So we got to cut this level to get down to this 69.30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30. 30 And so far, even in just this small period of time, we've already started to develop the two distributions that were dominant last week. If things do start to get ugly, 68.80 is the point of control from 2 weeks ago. It's also untouched still. And then way back here, 67.76, it was tagged, but we really didn't get a full breach of that level. I think there's still a lot of liquidity down here. So those are worth keeping on your radar too. Not that I think we're going to go that low. But if things were to start getting ugly, what I would focus on. Yeah, we're talking like coyote ugly, right? Like really ugly. All right, this is 10-day, 30-minute volume profile in TPO. We've got distribution all over the place, all these speed bumps. We're not going to get down to the point of control anytime soon unless things start to get really ugly out there. Headlines would have to give us some kind of shock and awe and really get to break things apart. We're also not expecting to see that point of control move, at least for a couple of days, because we got to get to the level that made these candles. So throughout the day today, we're going to slowly get into this area. And throughout the next 3 days, we'll wipe out this next area as well. There's 3 spots that made this current point of control. And that's through here, here, and then right here. We didn't spend a lot of time there to have that much footprint right there. But that's what's got to get taken out. At the same time, it would help if we hang out in one spot and build out a new level. That right now to me seems to be this level. It's around 69.32 cog line. That number just keeps coming up again and again. So a little bit of a breakdown, come into that, which is the top of the value area here anyways, and look for that point of control to get moved up. We have to see it play out though. All right, we can see that buyer's exhaustion back here. We didn't run into a bunch of sellers. We just got buyers that ran out of fuel. Same thing on the downside here. We didn't run into a big bunch of buyers. Sellers just got exhausted. So sideways range, it's already broke anyways. We're outside of it. But if we get back into it, keep your eye on that point of control, 69.78. Otherwise, we don't have a lot to work with looking left. No VPOC from last week. We got this one from the 18th down below us, but that's underneath 6,900 and it's not going to be helpful right now. It's all the way down here. So our own Globex low has the most helpful info at the moment. Let's go back out here for a moment. This last week's bar. The midpoint of last week is just underneath 69.50. That's our line in the sand for this week. We need to stay in the upper part of last week's range. Not asking for too much, huh? All right, since we weren't here on Friday, we didn't get a preview of the new week's range. It's a typical thing we do on Fridays. And these levels that we're looking at are typically based on a 5-day week. Right now, they're based on the short week. So last week was a short week, and this week is a short week. So at least we can compare 2 short weeks to each other. The current week has a narrower range than last week had, which is funny because I think this week is going to get more trading volume than last week. But either way, maybe I'm off on that. This week's range is projected to be even narrower than last week's range. The expectation from that is a hurry up and wait week where we really don't do anything. Keep in mind that these ranges are based on actual trades, anticipating what the market is expecting, looking at the options that were traded. It's not math or a guess or some, technical analysis that's looking at candle patterns. This is all based on currently held open interest trades on what the traders think is going to happen to the market over the next week. We're still above the 10-week at a relatively decent level. I'd like it back above that too, right? 2% above the 10-week is a great place to be. We're near that too. There's no complaint. There's nothing wrong here. I would just be more comfortable if we were back above the 10 by at least 2%. And we haven't broken this game that we've been in since mid-year with these lower highs, right? It's just been lower highs all the way down, lower highs. Really looking to break that by February or March of next year. Start getting back above that 2.5, and break some of these previous levels, get some higher highs in there. It's bound to happen. But we're not overbought and we're not overextended on the weekly. Looking at the daily, we're 0.5% above the 10-week. That's a great place to be. We're not overbought. We're not overextended. It's got plenty of room to move. If we want to make a run, it's perfect right there. So kind of want to keep it. If we do get a pullback and cut underneath that 10, well, it matches what we've been doing. You can see the rotation here. So it's what we kind of expect anyways, that we're going to get another box and then maybe get one underneath or two. So we'll see how it plays out, but it wouldn't surprise if we go and test that 10-day either today or tomorrow. And of course, it doesn't have to, right? We can see back here, it was on the way down and it didn't get back to the line. It turned around and went the other way. So looking at what's down today, gold miners, junior gold miners, the Mag 7 up volume is down. China, more China, uranium, chips, tech, quantum, the Mag 7, Bitcoin. Basically, anything that could help us get a rally today is down. Now, that doesn't mean that we can't rally, especially once we get into the open and we turn things around, start getting some 0-day flows, headlines, all kinds of things can get us going. But for the moment, we don't have even one sector that could get us moving to the upside. Looking at what's up, we got nothing. The benchmark that I use is a 0.5%. And energy's up, but it's generic XLE. That's just that. It's generic junk. It's worthless. So jump over and take a look at TrendSpider. TrendSpider does a really good job in the mornings with highlighting the movers. Does better than Thinkorswim for that task. We can see USO, crack, XOP, XLE, all those energy ones, right? Nat gas, and then that's it. Nada, nothing. On the one hand, if this was to change, it would be an easy thing to spot. You start seeing the Mag 7 rally, the Apple, Google, Microsoft, Tesla, Amazon, blah, blah, blah. You see those guys getting off the bench and getting into the game, more likely to spot an upside move. If we start to see chips, cloud computing, communication services, those sort of quote tech moving to the upside, that can help with a rally. And then, of course, 0-day flows. So if we were to flip things over and try to make that run to the upside, it should be really obvious because everything that we have now would need to change. I wouldn't get my hopes up on a rally day, by the way, or a breakdown, really. There's just no reason to expect that we're going to go anywhere or do anything for the rest of the year. Not to say that it can't happen, but my expectations are that we hold the line and we stay within the ADR and we end the day there. Maybe even the week, but that is the ADR. Now we can wick outside of it for sure, but base case argument, we close inside the ADR by the end of the day. And the ADR is these two red lines. Simple enough, right? So that's what I got for you guys. Be careful, be safe, watch the clock, keep your eye on headlines, a little gotcha news in case they do some sort of data dump. And we'll see y'all tomorrow.